Well, he was interning at Ernst and Young, and so he was going to become an accountant. But then he
All right.
got this
The
invite to
modeling.
go do modeling in the summer in Europe, and he did it. And that's how he got into fashion clothing.
Yeah.
He didn't like the modeling as much as he liked seeing the
The
process
process.
of making the clothes. And he thought when he came back, I can do this here. It really reminds me of how the Starbucks CEO, the guy who grew Starbucks, what is his name? I
Howard
forget it.
Schultz.
Yeah,
Yeah.
Schultz. He went to Italy on a vacation with his family. He was just managing this coffee shop in Seattle, and then he like saw the espresso and he's like, we can bring this back here, right? So uh, so Joe Kudla, he came back and he started two fashion brands, and they both failed. So Vuori is actually his third startup, and when he did the third one, he knew that he had to be really careful with his money because the first two hadn't worked out, right? And what's I find interesting about it is I think his accounting background probably helped a lot because in the interview he talks about how they raised a $400,000 convertible note, and his mission was to be extremely careful with that money. And he says, he wasn't good at raising capital, right? Most accountants are not great
Yeah.
at like sales, right? So he knows he's not great at like selling the company, raising the capital. So he said, all right, we got this money. We have to make it work. They only raised in the first 2 years 2.5 million, which is a very small amount of money to start an apparel company like that. You got huge costs, right?
Yeah.
The manufacturing costs, the shipping costs, sales and marketing costs.
Factories.
Yeah. So that's like a very small amount of money. And he developed a working capital model. He uses those words. He said, I was either going to lose all my equity in the business or we were going to have to figure out how to develop a working capital model that would fund the growth of Vuori. And that's what we ended up doing. And working capital model simply means that they needed to figure out a way where they could use the revenue coming in from sales to fund the manufacture of more clothing to sell, right? And not have to borrow huge sums to create a ton of inventory. So that means like having very little inventory on hand. And it means, just being very lean as a company.
And running a
And
profitable company. It's like the opposite of OpenAI.
right. And one way they did this was they originally started out by, doing what most brands do, which is putting their apparel in like yoga studios, because that's where Vuori started. Is Joe Kudla got into yoga, and so he noticed there wasn't yoga pants, yoga clothes for men. It was all for women, right? And so they were putting it in yoga studios, but that ends up being very capital intensive because you have all this inventory sitting on shelves in stores, and you don't get paid until it sells. So they pivoted to a direct to consumer model, right? And you could just buy it online and they would ship it to you. So that meant they didn't have to have that much inventory and they could have very little working capital. And they priced their product at a premium price. And all the people that were advising them said, no, you can't charge this much for men's activewear. Men are just not willing to pay that much. And he said, I think they are. I think they will if we market it right. And he was right, right? Men
He
are
was
willing
right.
to pay $100 or more for a pair of Vuori pants. And that's why they have a crazy $4 billion valuation. So I credit, Joe's accounting background for helping him to be able to build a working capital model and understand the importance of, keeping an eye on that money. And I bet you he was there reconciling those books, looking at those books a lot.
And we've said this before, like getting that accounting degree, regardless of what you do in life, is going to make you more successful. If he would have
Yes.
went to school to be a fashion major,
Yeah.
chances are he probably would never have been able to start this company.
He would have blown through the cash. He wouldn't have understood how to control his costs, and there would be no Vuori. So yeah, accounting is a great major if you want to be an entrepreneur. We need to like figure out how to make accounting courses more interesting so that we get more general business people who want to major in accounting, future entrepreneurs. Because I'll tell you, as a entrepreneur, this is my second business. I find understanding, my cash flows, my income statement, my balance sheet to be so incredibly helpful, and it's what's allowed us to, bootstrap Earmark, And if I didn't have that knowledge, I don't know how I would do it. It would cost a lot more, right? So being able to be lean and that is like, you got to keep your eyes on the numbers. You got to know your numbers. So I love that interview. Go check out the full one. You can get that at goldmansachs.com/insights. And yeah, great job, Goldman Sachs.